Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the forex synthetic market. In today's video, I'm going to be teaching you something that a lot of traders don't know about, and this thing has made them to lose a lot of money trading. Okay, so if this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content, and try to like and refer this channel to a network so that YouTube will push us to a high level of audience. Okay, make sure you watch this video to the very end and try to be proactive. What I mean is, this is not a financial advice. You have to leverage our effort by joining our various VIP groups and channels and enrolling for our mentorship and courses so that you can be able to avoid or stop losing. You know, the earlier you start making money, the better it becomes, because if you attempt to actually do this thing without leveraging the effort of expert, you're gonna have a lot of setbacks, and this can make you to quit. And I don't want you to be my subscriber and be a loser. No, you have to be a winner in WINFXTRADING YouTube channel and other social applications that we are presenting our services and products. Right now, the topic is supremacy of turning points and swings, highs, lows in forex synthetic market. Supremacy of turning points / swings, highs, lows in forex synthetic market. So this should be market, right? Okay. I'll be going too fast because this video might take a little bit longer because of a lot of practicals. Now, what is a turning point? What is swing highs and lows? And when I use the word supremacy, you have to know that this is very, very powerful and crucial if you are going to be a successful trader. Okay, so right now I'm going to take you to, because we shall be discussing both forex and synthetic market, so I'm going to be taking you to synthetic charts, and this is volatility 75 index. I will start with volatility 75 index. Right now, let me pick this arrow for better explanations. Okay, I will need this arrow at least. Okay, I will need at least 2 or more right here. Okay, and this will be present here. Maybe when I need it, I can use it. Can equally consider let's get other tools that is necessary to make this thing explanatory. Let's try get something that will be used. Okay, let's try part. So we're gonna start here, and then let's okay okay right now I've gotten the tool we are going to be using. So we have this upward movement. So we have this upward movement, and then we have to Sorry for this delay. It's just that I want to make this thing more explanatory. Okay, I want to make this thing more explanatory, so to speed up we're going to use arrows. So we have a market that point upwards and point a little bit downwards, and then point upwards and a little bit and a little bit downwards. Okay, and then you see the range characteristics of these events, we are not including it. So this is a kind of idealistic characteristics. In real life there will be some ranges both during the longer movement and shorter movement. Okay, so we have a movement that failed to take out the last high. So this market is basically an uptrending market. So we have a movement that fell. This movement actually failed to take out this high. Okay, by now you should know the meaning of highs and low. Shortly I'm going to explain the meaning of highs and low, but right here I'll be using the terminology, so just believe what it is for now, or try to understand what it is based on the context of what I'm saying. Right now I'm going to pick this part, this part object that seems to be, you know, it seems to be so dull and being used, but let's get it again. Okay, so we start from here. So we have this move like this, and this market start going up. Okay, this is where I will stop. This market start going up. Okay, I'm going to stop this here, this drawing here. Now let me label some stuff. I'm gonna do some labels. Okay, so let's put some tests. I'm gonna put a test here. We're gonna add a test there. Let's write it hash. Okay, okay, I'm gonna type hash. Okay, now let's move it. Okay, okay, right now it seems these letters cannot be geometrically transformed. It seems the programming cannot geometrically transform this, and so we have something like this. So this upper turning point, you see this upper turning point, these are called the highs. I'm trying to label this, but since this stuff are not getting activated, they cannot be moved. So this is a high and this is a high. Then the lower swinging or turning point is low. This is a low, and then this is a low, and then this is a low. Okay, so he write here, if a high is above another high, that is h, which is higher high, and if a low is below another low, like a previous low, then it becomes a lower low. So now if you watch this price movement, the market make a high and then a low and then a high and then a low. Now we cannot say that it is moving in a sequence of higher highs. Okay, so the market is moving in a sequence of higher highs. You see, this thing may not be so illustrative because of some of the things that needed to be done here are not done, like putting the lettering of the highs. But the truth is, if you follow along, you can actually redefine this in your own understanding. Okay, so that is it. So this market have a sequence of higher highs, but suddenly we notice that it stopped following that sequence. You can see that it reached here, stop, and then go down. Okay, it went down. So we need an arrow line. We need an arrow line to make this more practical. So we pick this arrow line, and then the market went down. Right now, as it went down, don't expect this low to create a high, because every low must create a high and every high must create a low. Don't expect this low to create a high. Why? Because the market have shifted from making a higher high sequence to making lower highs sequence. You see, this high is lower than this high, and every lower high should do what? Create a lower low. So it take out this low. So don't expect this market to be making higher highs. Rather, expect this market to be making lower highs. So when the market moves to create a high, it will reach certain price, certain higher prices, and stop. Meaning that the market is now creating resistances. Okay, these resistances will prevent the market from making higher highs. Instead, they will push the market to making lower highs. Okay, so the supremacy of turning point on swing highs and low is very important, because if you decide to disobey this supremacy, what it means is that when this low creates, you will be attempted to buy, thinking that the uptrend is still holding. And when you buy, the market can do two things. It can buy shortly and then go against you, or it will just go against you immediately. Okay, so if you start obeying this supremacy, there is no way you will come to this market that has a previous uptrend, okay, that has a previous uptrend whose waveform is like this. This market creates this high and create this low, create this high, create this low. So this market is making higher high sequence. Okay, create this high, create this low, create this high, create this low. Okay, create this high, create this low. If you look as a wise trader, you will know that the uptrend is still intact. I'm going to show you why. Because I'm not going to stop this swinging, this mapping, because if I stop, it's not going to continue like that. So after, I'm going to show you why this uptrend is still active. Okay, so it create this low, create this high, create this low, create this high. Every swing is very, very important. They make a footprint of what the market is doing in the future, is going to do in the future. So it create that high and then create this high. Okay, so every current highs and low is necessary to understand what the market is going to do next. It creates this high and then creates this low. Remember, I'm doing this thing in hourly time frame, so the higher the time frame, the better the information this swinging system will give you. But the truth is that in every time frame, the information is always telling you the same thing. It is trying to tell you whether the market is ranging or trending, or whether the market is about to change direction. Okay, so but the higher the time frame, the better the signal is going to provide. Right now, we have this high. This high actually is competing with okay, right here. Let's continue again. Let's pick another part. Just this thing you have to do. Some people think that this thing is something that, oh, it is easy to do. If you have been doing this, then you will not be losing money, right? But the truth is, if you don't know structural analysis, if you don't know what you call a ICT, which is a inner circle trading ideas, no matter, even if you are doing this stuff, you will still lose a lot of money. That's why you need to leverage our effort in order to go far in this kind of stuff, right? So you really need to leverage our effort if you want to go far in this kind of stuff, right? This is just a free content. Don't expect it to just give you everything you want, right? So I continue doing this mapping, and right here we'll let's get this thing. Right here we let's put this in order. We start from here again, okay, and then we have something that happened like this. So we have the market going down like this, okay. Just I will stop here because this is where I will start explaining. Now if you look at what I have mapped, okay, why I say that at this junction that this market is still uptrend, look at the reason why I say it is still uptrend. Let's edit this. Okay, let's I want this thing to be more practical. Let's get this. Okay, this is a horizontal line, and then let's make this thing more practical. Get the coordinates, visibility. Okay, okay, this is a style. Okay, it seems that this horizontal line cannot be edited, so I'm not going to use a horizontal line. Rather, I will use a kind of rectangle, and then we have this level. Okay, I'm drawing this based on the left, what is happening on the left side. So you see that price just tap here. It has not taken out this low, it just came down and reacted to this level. This is a support. it has not taken out this low. Now if at least one or two candle close below this level, and then there is a pullback and then a continuation to the downside, then it means that the market have changed trend. It is no longer making upward movement. But right here it got rejected. If you check that, if you check well, you will notice that there are a lot of rejection candles there, and then the market continue going up, and then it reaches here. Instead of the market to make higher highs as it used to, like you see, it make a lower high here, but it couldn't make a lower low. So the market is making higher highs, higher low. So if you check well here, it just make a lower high and then equal low, and then a higher low, and a higher high, I'm sorry. So it make a higher high. Now when it made this higher high, it took out this low. So because there is now change in sequence of price movement, we now have change in sequence of price movement, so it took out this low, not just by one candle, because most breakout can be fake, right? So it just took out this low, it took the low. Now when this candle close, this first candle that break out of the low close, that is not a sign to enter this market. You need to run top down analysis. You know, in fact, what will determine whether change of swinging or turning point sequence we hold is what the information the market have at higher time frame. Okay, the database of the market at higher time frame. Okay, that's why you should actually leverage our effort if you want to go far. So because this breakout happen here is not a guarantee that it is going down. Okay, so we now have this breakout here. About how many candles? 1, 2, 3, 4. These are all bearish candles. So it shows that actually this breakout is strong, right? But if you have some higher time frame or structure, some higher time frame structure information, structure behavior of this market, you can actually look for a sell. But if you don't, trying to sell here might lead to loss, because you might be trading a fake out. And what fake out does is that the market go ahead and grab liquidity. Okay, the market go ahead and do what? Grab liquidity somewhere here and then pump up. Okay, and that is very painful. It's one of the painful stuff in trading, right? Because you might have waited for this setup, and this is kind of stuff that actually make you to lose your mind, and then from that point you will lose forever, because you will not trust the market again. And the essence of this video is to make your psychology strong and your emotions. So try to understand what this topic is saying. This topic is not actually telling you that if you see this kind of pattern and you mark this, that you are going to succeed. No, but it's trying to tell you that the market have sequence, even though there are ranges in between. The market have sequence. You need to know this sequence so that you know what you are looking for, but that is not guaranteed that what you are looking for is going to hold, because of what? A lot of exemptions. A lot of exemptions like fake outs, liquidity sweep, stop loss hunt. These can make you lose a lot of money. Like, you might make profit today, then you are going to lose as much as you can. So what it is as much as you are watching this video, try as much as you can to enroll for our mentorship and courses, so that you really know how this thing can work, because it is mentorship that will keep you long term. Okay, you need discipleship to go find this kind of stuff, right? You see, I want to give a general rule of thumb.
You see, if you are dealing business with me, don't come to my DM and ask for price of a product or service. Okay, don't come and ask, and then after 48 hours you fail to do what? You fail to make a transaction. You fail to complete the transaction. If you are not ready to make a transaction within 48 hours, don't ever DM, don't ever come to my DM, because you are going to be banned. Okay, you are going to be banned. Once you can be on my channels, but if you are not ready, don't DM. Is what actually make us to succeed in this kind of thing is more than physical. So we have our policy, and that policy is more than any other thing. No matter what you know, okay, if you don't have principle, everything you know is going to be failure. So what I'm trying to say here is, if you are not ready to buy a course or a mentorship or buy signal, don't DM. But if you are ready to actually get this stuff within 48 hours, then you can DM. Okay, at least you are asking a question. Okay, how much is this, how much is that? Then you should have money at that point in time. Okay, then when you have the money at that point in time, then you can make a request. And then when you make a request, even if the money is not up to, then we can understand your weakness, and then we see how to help you. Okay, at least we are now maintaining our standard and our principle. In that way, we are going to make you to win. You know, any company that doesn't have principle is bound to fail. Even though they know what they're doing, they're going to fail. Okay, look at Nokia. What happened? Nokia has been going backwards, and now Android, iPhone, they're not doing better. Okay, I'm sorry. Other brand of phone like Infinix, Samsung, and all of that, they're not doing better, right? Now, it's because most of these things happen because of lack of principle. You know, it is principle that will make you to do what other people cannot do, right? So take note of this. So let me continue this video. So you see, this market have changed trend, and now what is doing is what is now moving in opposite direction. Right, the market is now moving in opposite direction. You can see this is a lower low, and then a little bit. Okay, let's get another one. Okay, this is a lower high, then a lower low. You see, the fear of missing out is one of the biggest psychological method, like is a psychological problem that brokers use to keep traders losing. You see, you'll be like, oh, this market is no longer buying, it's selling, and then you feel like, oh, I'm going to enter this market somewhere, and then like if I fail to do that, I'm going to miss the opportunity. Okay, without realizing that what pays is direction and not where you enter. What pays is direction. The more the market have a direction, the more you are going to succeed. Okay, that this market break out of this low and start dropping is not a guarantee that it is a sell market, because there are still key levels that the market will go and grab liquidity or a kind of orders, pending orders, and then change direction, right? So if a market have a change of character at first instance, like after getting to certain critical level, and then start changing characteristics, that doesn't mean it is changing trend. Okay, so the more the market move in a given direction, the more the market actually break levels in a given direction, the better the trade you make in that direction is going to work. So that this market take out this low is not a sign that we are going to enter. somebody that enter because it break out of this low is going to have more problem. It has like the person will have more probability to lose money than somebody that waits for further break of structure, because it is that break of structure that shows that this market is making move in a given direction. Okay, I'm going to explain this thing further. Okay, I'm going to explain why this is I'm going to explain why what I'm saying is real. Okay, let me give you an instance. Okay, let me give you an instance. You see that this is 1 hour time frame, and this market started from here and create a high, then create a low, create a high, create another low, okay, then create a high, a little bit high. Now you be like, as a trader that is like, you are very anxious, you don't want to miss an opportunity, right? It's not good to miss your opportunity, but then when you are looking for opportunity with a wrong motive, it's better you miss that opportunity than you go to an opportunity that will lead to losses, right? So you enter a buy here. Let's assume you enter a buy here. What happened? The market buy and then changes direction and came and trigger your stop losses. Some of your stop losses will be somewhere here or somewhere here, and then you lose. Okay, but when you actually wait for more break of structure, you will see that you will have more chances to actually get a real opportunity. Okay, remember, I'm not teaching smart money concepts or sniper entries. I'm just teaching how the market behave and what people don't know about market, right? Yes, somebody will say, okay, why not buy here? These are for another day. These are another topic that will be treated in future, but right now I'm teaching about turning point and swingings, okay. And so these things are what make a lot of people lose money. Okay, so you see that your stop loss was triggered because you rush the market. Okay, what is trading? The actual trading is your ability to make profit and not just to enter market and lose. Okay, like if you can make profit trading, that is when you are really doing the right thing. Okay, but if you trade and you keep losing, you are not actually doing the right thing. What I'm trying to say here is that you enter this market here because you are in a haste, and then you enter this market here and then you were taken out. Okay, you were taken out because your SL is somewhere within, and then the market pump. Okay, after you have been taken out, the market pump. Now you see this pump that happened here is a sign that the market is actually spending a lot of time going up. Okay, so the more there is a pump in a given direction, the more the signal you get in that direction will work. But the thing is, you have to be smart and enter at proper price. Okay, now you see there is a pullback. So as a wise trader, you'll be waiting for a pullback near what? Some other block or key levels like support, because you are going to be buying. So you will notice that here the market actually break this level. Okay, and then we have an order block here. You see, market analysis, technical analysis is very complicated stuff, because there are a lot of things that are involved here, which when you miss them, it will make you to lose money, right? So some people will not keep note of this order block. They will just enter this market without thinking of other block. They will just enter this market here without thinking of the other block that are going to cause problem in this market. Okay, so yes, you have to enter somewhere here because this is a support, but then this other block will help you to place your SL, because what the market will do is that it might attempt to go up and drop and create liquidity sweep here. So when you put your SL below here, you will see that you will be at safer side of the market. Or even when you put your SL at this swing low, you will see that you will be at safer side on the market. You can see that even when the market buy and reach up to a higher high, it start dropping. It couldn't reach this low, you see, where your SL is. But some people that use their SL, that put their SL somewhere here, they were taken out. Some that put it here, we are taken out. So the thing is, if you know what you are doing, your risk management matters a lot. So if you are to take high risk by just placing your SL somewhere in between here, after the market have created sign of change of trend like double bottom and other candlestick patterns like bullish engulfing candle, which I see here, and then you can see that what you do is maybe you look for rejection level, which are zero differential levels, and you put your SL somewhere here. And then when you buy this market, you want to take your profit on a previous high because you are buying, right? So when you take your profit here, what happened? When you place your take profit here, what happened? The market reached here and actually hit your take profit, right? So this video is taking time, and we have seen a lot of things happening, and it's really making sense. Okay, it's really making sense. What I'm saying here is really what some traders don't know about. Okay, right now I'm going to show you something in 1 minute, in 5 minutes time frame. Okay, I'm going to show you something in 5 minutes time frame, which is very important. Okay, now even if you don't know much about the higher time frame, but you see, it's very important you understand the market from the higher time frame, so that when you are taking risk, you know the kind of risk you are taking. You don't want to risk 50% where you are not sure of what is happening in the higher time frame. When you lose your 50%, it will be hard to recover that 50%, because at this point you might be tempted to risk further and lose all your money, right? Maybe you risk another 50% and lose all your money. So I'm still in 5 minutes time frame. I just want to use 5 minutes time frame to show you some things. It's very important, you know. So I don't know much about higher time frame. I don't know much about what is happening in this market at higher time frame, but I want to show you that this swinging or turning point supremacy actually works well at any time frame. Okay, so right here, we have this market that is doing something like this. Okay, and then like this. Now this market is actually making a higher a lower high. So it's created this equal high and then drop, create a high. This high is now lower. This is a proper lower high, and then create a lower low. Okay, create a lower high, create a lower low. Why should you be buying in this? Like, why should you be looking for a buy in this market? I don't care about what the higher time frame is telling you. You see, you don't over understood the market. You should actually be obedient to what the market is doing in any time frame. 1 minute time frame can make you lose money. Also, higher time frame can make you lose money. So it depends on your ability to be obedient to the swinging or turning point characteristics. That's why I say this topic is supremacy of turning points or swing highs and lows in forex synthetic market, meaning that at any time frame, if you fail to understand the swinging or the turning point characteristics or sequence in that time frame, no matter what you know in any other time frame, you are going to lose money. Because if you are buying here, you are losing money, right? But if you are selling, you are making profit, right? So that's what I'm trying to say here. So you see what is happening here, see what is happening here. Okay, see what is happening here, see what is happening here, see what is happening here, then see what is happening here. Okay, and then something very special just happened now. This market creates a massive upward move. Now this is where I will stop. Okay, now as I stop here, I'm gonna show you the next thing that might happen in this market based on swinging or turning point characteristics. You see this level, this is a swing, this is a swing high. Okay, this is a swing high. Okay, for this market to react to a swing high creating an equal high is a sign that the downtrend is weakening. In fact, it's a sign. I don't care about other pattern in this market, but the truth is, for it to come and create equal highs here is a sign that this market is changing trend. Like it is a sign that this market might be, the downtrend might be weakening, and so if price came and break above this equal highs, this is a resistance. If price came and broke it, okay, if price came like this from here and broke above here and then give us some pullback and then fell to continue going down, because this is where signal provider comes into play. It's not everybody that have the power, the psychological balance, the emotion, the patience to actually get the right entry in the market, right? So right here, you need to know what, if you don't know what you are doing, make sure you leverage our copy and paste our signals in real time, right? So right here we have this, okay, and then maybe the market give us the market give us a little bit pullback like this and then went up. You see, this is where we plan our entry and buy. Okay, it's very hard. You see, it's very hard to enter a market where you cannot be taken out. So that is our work. You might watch this video and try to put this in practice, but it will not work because it takes experience to actually get it right. Okay, so right now I'll be going to Forex market, and this is 𝑧 and what I'm going to I'll be rushing this because there's not much time, you know. I'll be rushing this now. Always understand the swinging system or the turning point sequence in the market. Okay, So we have a price action that creates a high. It actually creates this high. We are now in 1 hour time frame. It created this high and then drop. Okay, it went ahead as it dropped. It went ahead and created a high, but this is a lower high, right? And then drop and create. You see, the main thing is understanding this sequence of highs and lows. It's very important. If you didn't understand it, don't trade until you understand it. So it went down and create a higher low, and then go up and create a new high, and then create a higher low. At this spot, what are you going to do? What are you going to be thinking? What you will be thinking is that you should be looking for a buy. Yes, you look for a buy, don't look for a sell. Because where are you going to sell? If you look for a sell, the sequence is going to fight against yourself and you are going to lose, right? So the sequence is the market is making higher highs and higher low. Okay, the market is making higher highs and higher low. You see how it dropped here to peak liquidity and then start going up. Now it makes a new high. It's just understand the geometry. There's no way you will buy a market, there's no way you will sell a market that is making higher low. You have to buy a market that is making, there's no way you will sell a market that is making higher low. Rather, you have to buy such market. I'm going to show you what I'm trying to say. Look at what I'm trying to say. Look at this. If you study inequality in advanced school, like okay, let's say at secondary school, university level, you will come to realize that there is an inequality modeling this price movement. So if we have an equation of a straight line, we can easily draw this trend line, but we can convert the equation of this trend line to inequality, right? And how do we do that? If the price as is, if we have the price as is, I'm going to pick a test. Let me pick a test. I'm going to form an equation, okay? But that will be a linear equation, right? I'm going to form an equation somewhere that models an equation that models this price movement, okay? Right here. So let's change the color of the test to green, and then let's start adding the test. So we have P of T, where T is time, P of T, okay, equals to, okay, P of T equals to, let's assume that the slope of this line is 3, because I've not measured the slope, but I can assume that the angle is the angle, because slope is the tangent of angle of inclination. So I can take the angle to be 45 degrees, okay? If it is 45 degrees, or let's take it as at 60 degrees. So the tangent of 60 degrees, we are going to be in a, open your calculator and then being on a degree. So the tangent of 60 degrees, make sure you set your calculator to degrees. So the tangent, which is the slope measuring formula, the tangent of 60 degrees is 1.73. So we have the slope is 1.73 times time plus the intercept, okay? And right here the intercept, we are going to take the intercept to be we have not localized our origin, but we can take the intercept to be this price. So we started analyzing this market at this point, so the intercept will be a price value which is 2,585 point something. So let's take it approximately 2,586, or let's take the decimal because those things matters in good trading. And so we have 2585.57, and so this is the equation of this line, right? So instead of us to put equal sign here, we can say that this is greater than, this is an increasing function of time, so this is let's put this, okay, this is, we're going to put this, okay, it seems we need on screen keyboard, and then we have, so we really want to put greater than sign here, so this is we have greater than here. Okay, based on the programming, we can't have this symbol printed, but I can do something about it. So let's put greater than, okay, greater than 0, okay. P of t is equals to this, P of t is equals to those variables, those parameters, then greater than 0. Now what he's trying to tell you is that for any price, less than, because this line, anything above this line is positive and anything below this line is negative. So for prices below this trend line, okay, for prices below this trend line, okay, we will say that they are against the market characteristic, they are against what the market is doing. But for prices above this line, they are in support of what the price is doing, meaning that all prices below this line is going to lead to more losses, while prices above this line is going to lead to a profit only if you enter at the right price. Okay, so when you enter here and you buy, you are going to succeed. Now when I say smartness is needed, you see, you missed the buy here, okay, and then you wanted to enter here. There is no guarantee that it's going to buy here, okay, because the more you miss the opportunity, the more you lose the opportunity in future. You're supposed to have entered here and make the profit. They are entering here based on what is happening at higher time frame, or based on the market structure at the same time frame or higher time frame. You might have issues with your entry, because if you look here, this is a supply zone, so you cannot come and tell me that, oh, if this market drop to a trend line is going to buy, when you know that this is also a support, this is a supply zone, and you have already missed the entry when the market came to pick orders here. The general rule of thumb again is that market move from left to the right, and it have to complete its cycle, just like we have seasons. Okay, every season must complete its cycle before another season will start. Now what it is this market created this high and drop. It couldn't take out this low, and then it starts making gradual higher highs, and then reach a supply zone. We know it's a supply zone, so even if you sold here and put your SL above, you will make profit. That one now is based on market structure, other top-down analysis. But I'm not teaching supply and demand. But what I'm saying here is, market follows cycles, and so the cycle here goes like this. The cycle is based on the turning point characteristics. There are turning points that must happen before the market will start switching direction, right? So we have from left a high and a higher low. So what do you expect? Before you will believe that this is a higher low, then it must create a higher high. So it creates a higher high. Okay, so don't expect this higher high, because here is a supply zone. Don't expect this higher high to change the trend. No. First of all, it creates a higher high, so it have to create a higher low to complete the cycle. So the only way to do that, to create that higher low, is to gradually drop to pick this, to react to this last high. So this last high, price have to come and tap into this last high. If it has tapped into this last high, then it will create a higher low. So we will now say the cycle has been completed. Why? For a cycle to be completed, the market have to create, it will start with a low value, so it have to create a low, or it will start with a low or a high. So it have to, let's assume it start with a low, then it will have to create a low and then a high. Then when it creates that high, it have to create another low. So the cycle is completed. Now when that cycle is completed, you now run high level analysis to see whether that market have capacity to change trend. And so when you come here, you notice that when the price drop reach here, okay, it break this level, because when you are studying market cycle, you study it at mega level and at minor levels. So it break here and drop and then go up. Okay, that's it retest and then drop. It have completed the cycle within this minor region, because we have a breakout and a retest and then continuation. So that continuation failed to break out of this low, and that's why we have loss of volume. You see those candles, very small candles, and we have a doji candle. All those things, they show that there is a loss of selling volume, and the market is going to start buying. So with your risk management, you can just enter the market here, put your SL somewhere here. Everything is risk. Okay, every opportunity is worth taking once you know your risk limit. So you place this trade, and then the market start going up, drop a little bit, and then continue going up. Now what I'm trying to say is, since this market failed to take out this low, since it just failed to take out this low and it creates a high, okay, we believe that it will also come and tap, like it will also come back to this supply zone, simply because it failed to create a lower low. It failed to take out, let me just make this thing more clear. Okay, it fails to take out this high, because it is failing to take out this high. It is failing to actually take out this high. Then we will say that this market is still going up. Okay, and now it dropped back to the same low, higher low. What happened? As it tap, it continue going up. Okay, so I'm not trying to be general, say, oh, if you know this, if you watch this video, you are going to be a successful trader. No, you have to know this, that these things is what you should know if you want to go far. Okay, but it's not a guarantee that when you know it, it's all. No, because if you are not following it, you will be like, oh, you should sell. Okay, you should be selling, because it have changed from going up like this and then it's coming down, and you just be selling. Yes, you can sell based on what you know. Okay, and you can buy based on what you know. Okay, because if you understand that this market is actually making lower lows, you see it's making lower lows, so you can sell here if it reacts to a previous level, which is here. You can sell, right, and then take your profit Okay, so if you trade and you are not taking your profit, but the market actually give you profit, but you couldn't take that profit, you are a loser, right? So the general rule of thumb is try to be taking profit at key levels, at swing level or turning point. Because here is a turning point, just take your profit. Because here is a turning point, if you buy here, take some of your profit here. We know that it's going to make higher levels. You can actually try your Excel to your entry and keep holding this trade. Right here I'll be ending this video. Thank you, and make sure you are proactive with us. Be serious. Don't come to our DM and be asking prices and then you think you will not be banned. You will just be automatically banned. You can only ask price if you are ready to make payments, right? Because we are not playing here, and we already make a lot of profit trading on our own. So it's better you don't talk, it's better you don't DM than to DM and get blocked. Okay, so that is the general rule of, that is one of our policies. So thank you and bye for now.